Hello everyone, today is Thursday the 5th. I wanted to make this video to show how I make templates and how the parameters affect your money management and can make the difference between good settings and bad settings, and what I look for from trades on the chart to improve my template or improve my money management. Now this template here is on the NASDAQ, and I just let it run. I turned it on before I went to bed last night, so it started trading at 1 in the morning, and I just let it trade through the day. But the money management is this. If we go to the config panel here, in the trade manager, it's a limit order at the close of the bar, and stop loss calculation mode 2. If I mouse over the parameter, and you can mouse over the parameters and get a description of the parameter, is calculation mode 2, which is the high or low of the bar with a tick offset. So in this case, for this short, the stop loss is the high of the bar plus 8 ticks. And you can see it just took a trade here. It went long, and my targets are 15 ticks is the first target, and then 35 ticks is the second target, and I'm trailing the stop by the volatility stop, and you just saw it move up there. So here it hit the first target, and then it's moving to the volatility stop, and I got stopped out there. So so now it's up 12.55 for the day, but the equity high on this was about $2,000. So as you can see here, it would have hit my target. I got stopped out a little too soon. So what you can do is, you could, if I put the offset at 1 here, like this, it would be the volatility stop minus a tick. And had I done that, I wouldn't have got stopped out. Is that worth making a change? Well, let's look back at all the previous trades and see how that would have affected other trades. And I think it might be worthwhile. So just to go over this template again, this is trading 3 contracts. One comes off at 15 ticks, one at 35 ticks, and then the third one is a runner. There's no profit target here. And my trading limits are off, so this is not being respected. I'm just letting it run because I wanted to see how this would perform. And so I only have one trailing stop. These two are not checked, okay? So it's trailing by the volatility stop. Now, I didn't enable this 1 tick offset because I don't want to refresh the chart, but I'm using the Precision MA as a filter, and I have it set at 6. That's pretty fast, but 6 gives you an earlier entry and can also filter out when you get like 4 red bars like this in a row. It didn't turn, you know, it's blue. It wouldn't take this trade. This is actually a good precursor for a long. I see this a lot. You have 3 or 4 of these bars like this, even 2, and you get a trade like this, and it's usually pretty good. Now, as I discussed, probably the volatility stop minus a tick probably be a good idea because of trades like this. But let's take a closer look. So there's a lot to learn by examining trades on the chart. Now this is using the parabolic exit, and you can see here that there was a close above the parabolic short signal right here, this red dot, and the rule is on the parabolic exit is that you will exit at the close of the previous bar or the open of the next bar. So if the close of a bar goes above the parabolic, so here it's a short and it went above the parabolic, and we had a close right here. So it exited at the open of this bar, which is always equal to the close or thereabout. It looks like maybe there was a tick slippage. And same here, this exited at the parabolic. It was the close of this bar and then the open of this bar, and they both matched. So another thing that you could try on this is instead of having a runner, you could have a fixed target. So 15 and 17 or 18 or 20 ticks. This was 21.75 and it went as low as 17.75. So this could have easily been a 20 tick target and you would have been hit. So if you want more of a scalping type of strategy, you could have the third target equal to the first or a couple ticks more. And so let's look more at these trades in the equity curve as this progressed. Okay, this was a loser, and I look at this and I ask, well, should it be the high of the bar? It's the high of the bar plus 8 ticks. I think it actually exited here. Yeah, it's the high of the bar plus 8 ticks, and that's what it exited there. Okay, here's another trade, and this was exited because of the parabolic. And was that good? I'd say yes, it was. Even though it might have made this, your drawdown came to break even. So, perhaps you could try a setup where you don't have any trailing stops. It's you go to break even at 15 ticks, but you know what? You would have got stopped out right here at break even probably. So I rarely use a break even stop. I just use the button here. All right, here's a couple losers that drew down. And what's interesting is I think the maximum drawdown wasn't that much on this for trading 3 contracts. So here is it hit the first target, and the volatility stop, our trail stop was the volatility stop at 10 ticks, and boom, we hit our first target, which is 15 ticks. And so our stop loss is pretty small. So using the volatility stop as your trail stop can be pretty good. It's pretty effective. So all these, fancy types of trailing stops with trend lines or whatever that some people, suggest is not necessarily the best way to trail a stop. We have a unique feature with this trail stop reset. You have your base trail stop, and then you can reset it 2 times. So as the trade progresses, you can ratchet up the trail stop and bring it in closer and closer. And we have really effective tools for doing that. In the next version, I want to make a moving average as a trail stop. So a trigger below the moving average can be a trail stop. And we have a new moving average that's better than the simple moving average, and that's going to be in the next version. So let's look at some more trades. Here's another one. Once again, our first target was hit, but no more, and we got trail stopped out at the volatility stop. That's pretty tight for your exit. That's a pretty tight trail stop. We got whipsawed on this trade here because we went short and it didn't go anywhere, and we got trail stopped out the high of the bar and 8 ticks. Now, what could have been improved here? Maybe the moving average, but you can't fix every bad trade. Let's look at some more trades. All right, here's a couple of winners, and we were talking about this volatility stop. Should I have an offset? Well, looking at these 2 trades right here, yeah, if I would have had a 1 tick offset here, I wouldn't have got stopped out. and the moving average, I wouldn't have gone long here because the moving average is still red. So if I would have had the 1 tick offset, this actually probably might have required 2 ticks offset. Let's look at the close of the bar on this bar here. So the close of the bar was 79, and the volatility stop was 78.75. So it would have needed to be 2 ticks, not 1 tick. Okay, next trade, same thing. This actually worked in our favor right here at the volatility stop. And then this one closed, I think because of the parabolic or the volatility stop. It's hard to tell on this one. Now this closed because of the volatility stop. So I'll come back to this. Let's look at this. This trade was stopped out. Okay, I think this is where we were, and let's move on here. Okay, here's a nice winner. We went from 7 to 11, and we hit both of our targets, and then we got stopped out by the parabolic, which is the close of the bar and would be the open of the next bar, and it looks like there was a tick slippage here, and that's fine. This was a really good exit. So the parabolic as an exit is pretty good. The parabolic settings on this are an exit 7 sensitivity of 1 with a 0 acceleration. Okay, small loser, tight stop. Nice winner here. Notice the split fill, and then the exit here was either the parabolic or most likely the volatility stop. Another nice winner here. Probably didn't get filled right here because we didn't get pulled back on the moving average. Should have got filled right here, but it was a limit order. This must have taken off and just didn't get filled. Same here, I believe. Which brings me to another thing, reversal look-back bars and order cancel bars. On this, the order cancel bars is 3. And this was, our reversal look-back is 1. That's not good. That's why some of these trades were missed. These would be... these should have been filled, and these would be winners, but this might have kept us from some other trades, so I have to look at it. But basically, the reversal look back at 1 means you have to have a red bar here, and you have to get filled on this bar, and that's it. So if we look at all these trades, we see there was, 1 bar ago, and boom, you're filled. We're here. We should have got filled on this bar, but this was 2 bars back. So this qualified for the reversal bar look back, but it didn't cancel in 3 bars, so we got filled on the limit order here. So I'm just going to scrunch this up and look at our equity curve here. We made a high of 1905, so the best time to trade on this particular day was starting around 4:30 a.m. And by 7:30, you had a pretty good, shorts and longs here. And then I think our equity high was 2150 or so. And then again, the best time to trade would have been starting at 11:30 or so. And we came all the way up to about 1600 to where we are now. Anyway, to not keep this video so long, what I might change is the volatility stop minus a couple of ticks, and I would change the reversal bar look back because I'm missing some trades here. Like here and here. I might have had this turned off, I forget. Yeah, I think I had unchecked this box here, but the changes I would make in this would be probably the volatility stop -2, and you could try a fixed target here. You could have 15, 20, and 35. You could trail your stops in a number of different ways, but I'm going to include this template with the next version, or I'll post it in the group. But hopefully this helps with making your templates. Everybody should understand the settings and how these templates, how you can make your own settings and understand what you're doing instead of relying on someone else for all your trading. That shouldn't happen to anybody. Everybody should understand what they're trading and why they're trading it.